Christopher Horvers, a JP Morgan analyst, stated that it was tough times to turn the ship around when talking about BBBY. So why are investors not giving up on BBBY in this challenging time? Perhaps they are waiting for the ship to turn around. In that case, how bad has BBBY been lately? Follow us as we discuss BBBY stock, why Wall Street investors aren't giving up. Let's get started. For starters, let us look at BBBY stock analysis briefly. In 6 of the last 9 trading sessions, Bed Bath & Beyond stock has increased by more than 20%. This stock has gained almost 70% so far this year. Since hitting its 52-week low, the stock has almost quadrupled in price. But stocks have dropped around 5% in the previous 12 months. Investors need to remember this. Whenever a stock price falls by 50%, it requires a 100% increase to return to even. If a stock falls 85% and then recovers, it will not be at its original price until the price is back up by around 567%. At this point, Bed Bath & Beyond is best described as a trading option than an investment due to its extreme volatility. Compared to stocks, the price of stock options fluctuates much more often. For example, when purchasing or investing in stocks, there is both the potential for large returns in comparison to the amount of money risked and the genuine risk of seeing that whole amount of money vanish entirely. However, the hope for significant profits seems to be prevalent when it comes to BBBY.
I think so.
Moreover, the business has been having trouble. The CEO and the head of merchandising both departed the business after it reported profits in June, and as a result, the stock dropped about 24%. And since late June, nothing has really changed for the better. However, Ryan Cohen, the co-founder of the online pet supply company Chewy Incorporated, has a plan. And we think that this strategy is a big reason why Wall Street investors aren't giving up. Keep watching as we will fill you in on the details. The management is now concentrating on the strength of the financial sheet. This entails turning inventory into cash. Bed Bath had around $1.8 billion in inventory on its books at the end of the most recent quarter, an increase of about $200 million from the previous year. With around $100 million in cash at the conclusion of the quarter, the corporation had lost almost $1 billion since the previous year. Well, whatever the change will be in the coming months, we'll let you know about it, so subscribe with notifications so you don't miss anything. Before discussing Cohen's plan in detail, it is important to note the circumstances that prompted it. When BBBY was led by former CEO Mark Tritton, the goal was to sell off unprofitable affiliates. Specifically, it was based on Tritton's work as Target's chief merchandising officer in the 2010s. Instead of cramming the shelves with deeply discounted high-end products from major brands, he decided to focus on the store's own private label, which he knew would be of higher quality. In any case, he is no longer employed there. According to an article by Fortune, Bed Bath & Beyond fired CEO Mark Tritton because of crashing retail sales.
Bummer.
Anyway, Cohen's plan may have been successful if the globe hadn't been so restless. In the beginning, the contagion caused shops to shut down and a significant drop in revenue. Afterwards, the reopening caused disruptions in the distribution network, and retailers were unable to satisfy the increased demand. Inflation drove prices to the moon finally. Ryan Cohen then joined the conversation. He invested $150 million to acquire around 10% of the company's equity, and then ordered the board to liquidate important assets, including the BBBY Baby network of stores. Stock in BBBY was worth roughly $15 per share back then. Prices for it have been hovering around $5 as of late. The baby products business was worth $1.1 billion when Cohen first got involved. BBBY has a current market value of $357 million.
Not bad.
So now, investors are not giving up because Cohen's plan might just work. Now to the BBBY stock predictions. According to AI Pickup's projections, the share price of Bed Bath & Beyond will decline from 2022's $13.10 to 2023's $16.67 before leveling out at $12.60 in 2025. Pana Forecast predicted a 36% increase in Bed, Bath & Beyond stock price between the end of 2022 and 2025, from $14.06 to $34.80. It's vital to keep the significant volatility of meme stocks in mind while examining any stock projection for Bed, Bath & Beyond is vital. Therefore, experts and algorithm-based forecasts may and do make mistakes. So in your opinion, are investors making the correct choice by sitting tight? We can't tell for sure, but one thing is certain. There will always be some degree of danger. Maybe one day you'll strike it rich with BBY, like the young man who did. Watch the full story in our video, how a 20-year-old made $110 million in 1 month with the Bed Bath & Beyond stock. See you there.